Folks, my name is Benjamin Z. Miller, and in this video, I'm going to answer the question, why have the deposits at the United Kingdom's four largest banks, including NatWest, Lloyds, HSBC, and Barclays, experienced a significant decline of nearly 80 billion pounds sterling in the past year? So why has 80 billion pounds sterling Why have the deposit levels gone down by so much? Well, good question. First, please don't forget to like and subscribe for more content just like this video. So the answer is the deposits at the UK's major banks, namely NatWest, Lloyds, HSBC, and Barclays, have encountered a substantial decrease of approximately 80 billion pounds sterling over the last year. This decline can be attributed to a combination of factors. Firstly, retail and corporate customers are seeking higher interest rates for their savings, and I can tell you all about that. Folks, which has prompted them to explore alternative options. They are looking outside the bank. The money is looking for higher rates of return. Concurrently, households are grappling with escalated living costs, leading mortgage holders to pay off their loans early in order to mitigate potential financial strains from higher interest rates. In the 12 months leading up to June of 2023, the big four banks collectively witnessed total outflows of around 78 billion pounds sterling. Although these banks still retain roughly 240 billion pounds more in deposits compared to 2019, they are facing intensified competition from other lenders that offer more attractive interest rates. A lot of people right now are very interested in real estate lending. They're very interested in what's called mezzanine lending. Mezzanine lending can supercharge your rates of return. As a result, customers are transitioning from current accounts at major banks to savings or fixed terms deposits at smaller peers. Benjamin Toms, an analyst at RBC Capital Markets, emphasizes that this migration is particularly notable among retail customers, while in the corporate sector, the hunt for higher yields from corporate Treasury departments is driving significant changes, and also the emerging market bonds. Companies like Andesite Blue, they are well positioned. In light of the current environment of elevated interest rates, banks are facing pressure to promptly pass on the benefits of these higher rates to their savers. The House of Commons Treasury Select Committee has criticized major banks for profiteering by withholding benefits from loyal savings customers. The Financial Conduct Authority has also set a deadline for banks to justify low interest rates or face penalties. Consequently, major banks are improving rates on instant access accounts, albeit lagging behind some rivals. Despite these measures, the outflows are driven by various reasons, including consumers withdrawing funds to repay mortgages early, influenced by the desire to offset potential expenses due to higher rates. You know, folks, if you're listening to this and you're thinking, well, that's interesting, but where can I get a higher return? Well, just ask and the answer will appear. If you are interested in a higher rate of return, go to my website, www.benjaminzmiller.com, and fill out the contact form, or send me an email, ben@benjaminzmiller.com. I hope that helps. And by the way, if you want to learn more about investing, join one of my free investor networking groups. You can meet investors from around the world. We have hundreds of investors now in the group, hundreds of investors, and there's going to be thousands soon. And I highly encourage you to join. Just go and do a search for Benjamin Z. Miller Investor Networking Group, and you can find the group there. You can join, and you're always invited. You're always welcome to come to the free meetings. I hope that helps, and I wish you good luck with your investing.